sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video I'm just going to be going over my usual, nothing out of the ordinary or special, so I'm just going to go ahead and get it started here. First thing I want to go over here for this monthly chart on Bitcoin is I want to fixate on, we go all the way back to 2011, 2012 of this bear bottom of these pink vector candles. You can see first candle, so this green one right here that we closed above this purple moving average. You'll see progressing here. It acted as confirmation leading into the next bull market. When you fast forward to 2015, this was and is the only point of exception here for what I'm getting across. You can see we closed right here above it, and then we had this one candle right here of this massive downside. But essentially here, and especially after we got this one, it opened and it closed. I mean, the whole entire candle was essentially above the purple moving average. You can see right there, bear run ensued. Go to 2018, 2019, pink vector candles for our bottom. We see, get this first close, we have this intermediary run, and then we do see our move into the second bottom of this overall W, or this double bottom pattern, this macro double bottom pattern that ended right here with the March 2020 crash. Then if we go to our current bottom range, you can see pink vector candles printed. See, we, for the first time, closed above this purple moving average right here, February of this year, at around 25,000. When we retested that once more, first time we tested it being August of this year. We're also getting our turquoise vectors printed as well, so that acts as another point of strength reasoning behind. You can see going all the way back here, we closed, once we got blues, bull run had already begun, was in its very early moments. Again, 2015, same thing for 2019, and then looking at the way it behaved after our March crash as well. If we take a look here for an update on this RSI, you can see right here, we already, last time I went over this, we were about in this pink bubble area. Now we've completely gone above the horizontal line that I have here at 52, being very important. You can see going back here, that's, we see it slightly after we get to this 0.618 area, so it's kind of green, kind of almost pastel green color that we see here. Once we got that, it also acted as a RSI confirmation. Again, we're still continuing to see an upswing here on this momentum MACD indicator. Each one of these vertical dotted lines, again lining up same point, looks nearly identical each time throughout the movement of the cycles and everything. Here on this 2-weekly chart, what I want to go over for here is fixating attention on the 50 estimated moving average band, which is going to be, or the cloud. So this purple one with the blue moving average right in the center of it, you can see we go all the way back here first to here, 2015. You can see once we got our candle closed above it, bull run began. We also got the turquoise vector printed right here as well. See the same thing right here for 2019 into this intermediary high. Had this brief moment of the March crash, and then you can see the first time we closed above it right here, we got the yellow vector. You can see we got the yellow vector right here at the early moments of this momentum swing and price action towards the upside. And if we go to our current price history, we can see here again closed above right here, very minorly at around 28,000 approximately. What would be the best case scenario to see here again on this 2-weekly chart? Have about 9 days left. Is that best case scenario? We'll see price continue to go up from here, and the next candle will, once it opens, and then hopefully it'll close, essentially most of the candle will be completely above this 50 estimated moving average, which would, in my opinion, really be strong confirmation for the beginning of the bull run. I mean, personally, if I go back to this chart real quick, this RSI and the MACD that I went over, I feel like it's kind of clearly indicating where we are, especially with the vector candles that I've been going over for quite some time. But here in this chart, another 2 weekly chart, we can see here for the paying attention to the white moving average being the 50 period moving average. You can see if we go all the way back here, 2012, once it started to close, open above it, bull run was confirmed. Go to 2015, see the same thing, closing, opening above, continuing to see that strength, bull run was confirmed. Then if we go to 2018, 2019, again, we'll have this intermediary high come back down for the March crash. You can see started closing above it, got the turquoise printed. The more severe parabolic movement towards the upside began. And right now, currently, you can see we are doing the exact same thing again. We are getting the turquoise vectors eye. Just to quickly touch on this, months ago, I believe it was months ago, maybe about 1 or 2 months ago, maybe even longer. I don't remember how long it was, but on my Twitter, which is in the description of my videos, and I may or may not go back and find it and post it on here as an image right now over what I'm talking about. But I was saying, once we started to finally get these turquoise printed right here, these turquoise vector candles, that would really be full confirmation that the bull run is actually beginning. And if you've been perhaps scared to buy in at any point so far on this move towards the upside, if you're waiting for some sort of like major retracement below like perhaps 20,000, or maybe you think the bear market's still going on, whatever you may think, this right here is very strong in my personal opinion. As also, if we look here at the 2 weekly RSI, you can see just kind of going back and examining each of these bare bottom lows. You can see we hit the rough range each single time, going back here and just looking. Well, I guess I could just go and do that again just to go over this. In the 2 week, you can see bullish divergence down here. We're in this dark blue zone, broken above our range. Pretty clear picture painted there. And then here for this 2 weekly chart, which I put in my last video, I had the yellow range, support range on here. I added the orange resistance range. Again, just to quickly go back over it, if we go all the way back here, the 50 estimated moving average and the 50 moving average becoming entangled, having a crossover. Only other time that has happened in Bitcoin's history, other than just maybe about a week and a half, 2 weeks ago. Only other time this happened was November of 2015, October, November of 2015. Which then led to, outside of the very first run all the way back here, essentially would be the second most best bull run, I guess you could say. Obviously the percentage gains are decreasing over time. Bear runs are also becoming less severe as well as Bitcoin matures. But we see the same thing right here. Let's take everything off. You can see we've more severely started to see this crossover again once more. It's the white over the white right in the dead center of this. Once we start to finally see the yellow and the purple moving average start to go back above this, like we did back here and also back here, which would line up with about around essentially the same exact area. To further confirm this movement towards the upside, also just to go back over it, the price target according to this, if we meet the exact same area we did back here for this double top from February, March 2021, November 2021, you can see, as I've been saying for quite some time, 200, 300,000 is what's likely, most likely in my opinion. For the first top, most reasonable estimation would be around 210, 225,000 for the second top. If we end up getting this double top formation, perhaps we're just going to get a single top. But if we do get this double top formation, I could see it probably going no higher than around 250,000 approximately, but more closely around like 240 to 245,000. And once more, that just adheres to the overall phase cycle structure that I've gone over plenty of times on this channel. I'll have cards linked at the beginning of this video if you're new to the content, you're not familiar and would like to look more into that. It's going to be the first card that I link. But here for this 2-day chart as an update, again, broke out of our curve linear falling wedge pattern. We've also broken out of the linear resistance right here, the red dotted, come down and tested it twice in this bullish megaphone pattern. We're continuing, as we can see here, to bump our heads along this ascending resistance. So either we will continue to kind of carry out similar to how I have it drawn out on here. Perhaps we'll get a quick move up towards 45,000. Realistically, and kind of just to put it in a more general sense, I see it just what being more likely is a slow, gradual build up towards no higher than approximately 45,000, and then from 40 to 45,000 will likely then really begin to take off after we meet that criteria. But again, once more, just to entertain everything. Worst case scenario is we come back down. We have hopefully we would have a healthy retracement down to no lower than 22.5, 23,000, perhaps 25,000 if higher. But if we start to lose that, and then especially lose 20,000, we could likely come down and just retest our previous lowest low around 16 to 15.4, 15.5 thousand. If we lose that, we could drop down as low as 12 to 10,000, maybe even seeing some weeks down to like 99.8 thousand. I don't think that's likely at all, as it's probably been gathered. I think the bull market is essentially 100% confirmed, but I mean, at the end of the day, everything isn't. I mean, no one really knows what's going to happen, and this channel is definitely not meant for financial advice. So here for this daily chart, we can see that we aren't printing a bearish divergence here on these lower time frames. If I go to this 2-day chart, we can actually, on here we are getting it. You can see with the ascending resistance, it's positive for the slope, and then down here it would be a negative slope. So we are getting a bearish divergence there, which could, like I said, initiate a retracement down to 23, 25,000. Although it couldn't, given that this does seem to be very promising of a bull market. During bull markets, the RSI, the indicators, etc., will stay oversold, but price continues to go up, and it may look like it's oversold and it needs to go back down, but it won't do that because it's basically it's releasing all this pressure that it's been building up towards the downside, having this convergence down to this point right here, and then letting out all that momentum. Again, going back to that higher time frame MACD I went over. But on this chart, we didn't, as I mentioned in one of my community posts, we didn't really see a fruition of this, what could have been a double top right here. We continue to go higher. Like I said, on this daily chart, we're not seeing from this first top right here towards where we are currently, we're not seeing any significant bearish divergence. Again, we are still seeing that kind of longer term bearish divergence with the overall resistance with these yellow dashed lines. So I mean, that could end up playing out as well. Or we could just continue, like I said, bump our heads, slowly move up gradually, akin to what is on this chart. Here for this 4-hour chart, just to get a further zoom in on it, you can see this is what I've been posting more recently on the community tab with this more micro, this more shorter term, kind of this oscillation point. You can see this is obviously pretty important. We have a touch point right here, then you could perhaps, if we continue to go up from here and just continue to have that slow gradual build up, you could kind of look at this as a fake out of this overall kind of oscillation trend range, I suppose I'll call it. But if we continue to break out from here, we are meeting the uppermost resistance right now, so again, we could have that retracement like I've been mentioning. Or right now, I don't see the next move going any higher than around 36,000, 32 to 36,000. Then once we sit there for a little bit, maybe towards the 40 to 45,000, and then from there, essentially, we'll start to see a major upheaval in the price action. If the macro ideas I've been going over at least play out partially accurate. But to be looking out for here for Bitcoin is around 29.9, 29.8 thousand. If we lose that after essentially approximately 27.5 thousand, once we lose that, I mean, we could free fall to around maybe 25.5, and then even lower than that, 24,000 would be the bottom of this range that I have drawn out on here with the black trend lines. But I don't really see that happening, but those are important price targets to be looking out for if we do see movement below the 25,000. Like I did say, I mean, we could come down and we test 23,000. If we did do that, that would essentially kind of line out with a similar fake out, kind of perhaps similar something like that we got previously. I mean, obviously anything and everything is on the table. Here for Ethereum. Ethereum has been moving rather good recently. Hopefully we've met this this range, this highlighter range I have right here that I drew out some time ago. and this could likely be acting as a leading indicator for Bitcoin, not in the sense of an overall macro market indicator for the fluctuation of the market as a whole, but Ethereum does, like a lot of the times, act as a kind of more of a shorter time period leading indicator. The fact that this is looking like this is likely, at least hopefully, we hope that Bitcoin will actually continue to break above here in this resistance, like we see here for Ethereum. But really the most important price target to be looking at here for to the downside is around 16,000 approximately. Then 15, well not 16,000, my bad, 1,600 to really 1,600 to 1,500, which will just kind of line up with this. We'll eventually start to lose this 16-month purple resistance that we've broken out of so far, going down around 14.5 thousand as well. Here for Cardano, again, we can see 16-month resistance, the yellow trend lined. We are beginning to finally push higher here, breakout of what we got entrenched below down here in this area. Hopefully we'll continue to go higher. Right now we are at the highest price that we've been since we got this momentum reversal in price across the entire market essentially. So right now, if we start to see price significantly push above and close above 45 to about 48, so let's just say 45 to 50 cents, that could likely be an area you want to look out for if you're interested in this. Perhaps you want to buy in a form of a breakout trade. I mean, if it does break out, I mean, I would say it pushes no higher than around $1, maybe seeing some wicks up to maybe like $1.20. Here for the New York Stock Exchange, we are finally, and I actually, just to go on a tangent here real quick, I was recorded this video last night. It was like 53 minutes, it was 53 minutes and some odd seconds long, and my mic was working. I was looking over at OBS the entire time and it was picking up my audio, but I get done with the video and I go to edit it and I'm like, why can't I hear my voice? My voice isn't there. And then I go back to OBS and just make some small recordings to see if it's maybe that, I don't know, I guess the file got corrupted or something because the mic audio is picking up, or perhaps I record, I don't know what happened, but it frustrated me. So, but last night we weren't really, when I recorded this firsthand, we weren't really seeing this kind of bearish divergence that we're getting right now. Actually, my bad. We're still not seeing it. My mistake. But if we actually take a look here at the SPX, we are seeing it. Oh, actually, that's why I got confused. On the SPX, we're seeing this kind of perhaps a bearish divergence playing out here on this daily chart. But it's the SPX and the NASDAQ. So what we're looking at right now, all these being the daily chart, that are looking more like being rejected from these ranges. So the black range on here for the NASDAQ, SPX coming up against this red resistance range, and then the New York Stock Exchange kind of oscillating in this similar. If it were to continue bullish from here, looking similar to a megafold pattern, perhaps we were to go up something along this line right here, come down and then continue to go up. As most of you know, I do personally think that decoupling is ensuing, not just because of what we see in the charts, but because of how the world is in turmoil right now, and it doesn't seem to be getting any better, and I personally don't think it's going to get any better. But outside of that, we start to lose 15.4 to 15,000. We'll likely start to initiate the further drop to the downside, then even further. 14.8 thousand could likely come back down, do something maybe like this. Maybe we'll come back up, and then we'll even go back all the way up to here, and then we'll finally go down, something along those lines. I mean, really, as I've said multiple times on this channel, I mean, I could draw an infinite amount of paths on here, but only one of them is going to be followed, so who really knows what's going to happen. But so far, as a summation, all three of these really seem to be coming in with resistance and likely are going to get rejected, in my opinion. Here for XYO, you can see here we are towards the upper range of this kind of triangle pattern. This consolidation we've been making after we broke the 16-month resistance. This looks a lot quite similar to Cardano's chart. So if we start to see volume confirmation support, etc., strength towards the upside, breaking above 0.0055, then especially 0.0065, that would be somewhere to look out for a type of breakout trade, something along those lines, as I've been saying for quite some time. Next likely range is going to be around 1.5 to 2.5 pennies. Or we could, excuse me, had a burp there, my apologies. But if we continue to go from here, let's say we overshoot this a little bit, and we actually come up more towards kind of this area back here, and then we come down and we actually use this red resistance, or just this red range that I have on here more as a support instead of just consolidating within it. But for the downsides here, if we start to really lose around 0.005, then especially 0.045, things probably aren't going to be looking too hot. Here for the XYO to Bitcoin chart. Nothing really too much to update here. Hopefully, and we can use this XYO to USD chart to further strengthen what we see right here, which could likely end up being on our current trading right here, being a double bottom along this purple range right here, which going back to this price consolidation would act as very hopeful support. Also, as I mentioned in the previous video, these three little kind of phases I broke up the two significantly bearish biased trends in the price overall within XYO's overall history. And I would personally say we're kind of just essentially within this build-up period before a next parabolic move, bullish move towards the upside. Again, for all these altcoins, Bitcoin, the way Bitcoin looks, Ethereum, etc., Cardano, also just further strengthens the analysis for these. For Phantom, we've continued to move up here in this kind of flag pattern, similar going back to Bitcoin. We can see if we zoom in here, we've broken above, closing above now this yellow highlight that I have here for what was resistance. So this is looking very good. We could likely come towards around 57 cents and sit there for a little bit before we make that next move towards the upside. But the next highest, so best case scenario, forcing this next thrust the momentum towards the upside. Let's say if we just kind of take the target, if we look at this is just some sort of flag pattern. We take it from breakout. I mean, it is lining up with where I have it up here, so just around $1 to $1.50 likely be the next area it would move to according to that. Again, here for Phantom, if we start to lose 44 cents and then especially 33 cents, those will be two areas to look out for. Here for JASMY, I think JASMY is looking really nice, going over this falling wedge for quite some time. Been carrying it out for quite some time. I'm sure a lot of you, especially you that are interested in this coin, it's been rather a rough time period. I mean, you've been able to really draw a falling wedge type pattern on this thing. I mean, going all the way back to, this area, and then it still continued to go even lower. But now we've gotten a breakout similar to the rest of the market. Looks like we're forming some sort of a bull flag right here. I'd have to say we have continued to go up somewhere to Phantom. We're following this red path that I drew in here rather nicely as well. So looking out for a break above 0.065 is important. We start to significantly go below 0.005. I would start to look out there, and then especially, obviously, our previous low at around 0.043. Here for THETA. Again, we're coming in, we're testing, we've hit our heads on it twice right here, this overall 16-month uppermost resistance line. If we zoom in here, this is the first time we started to get candles to close and open, having the bodies fully out of the 16-month resistance. So looking very promising. Again, including the way Bitcoin, Cardano, Ethereum look also further strengthening this. Areas to look out for to continue to break through would be around $1.18, $1.23, and then even further, obviously, our previous high back here from around $1.25 to $1.31. But then we could continue to kind of, like I said, I believe personally we'll see a gradual build up for Bitcoin and then just a really quick, rapid release of price action towards the upside. So, we could likely kind of just build up within this general range right here until we finally have that momentum release itself towards the upside here for THETA. On the downside to look out for is going to be around really just $1, and then even if continues to plummet through that around 90, I'd say around 95, 93, or 95 to 90 cents. Here for TRIAS, again, still trading within this range that I've been going over. We zoom in down here. I would say definitively, I don't think we'll go back into this kind of lowermost triangle shape that you see right here. But if we do, for the downside, important prices to look out for will be around $2.80, around $2.50, and then around $2.25. Right now we are starting to push above this uppermost area that I have drawn on here, so that's fantastic to see as well. If we continue to push up from here, we could see a move up towards around $6. We'll say around $6.80 to $7, or perhaps we could do something like this and we'll go up and then we'll come down and we'll use this pink range right here for support instead of kind of going up and then consolidating with it and then breaking out something along those lines. Again, who really knows what is going to happen. But in general, I mean, obviously, so this pink range that I have in this yellow circled area here, I mean, there's a lot of areas that we could continue to go up to here where we could, and what would suffice as points of consolidation. Here for Dogecoin. Again, really nothing too much to update here for Dogecoin. It's essentially still just following along with what I went over in the previous video. I believe if we go back to this purple blob that I have right here, and then we have another purple blob right here. We have our 3 pink arrows, which are in a line with these 3 dots, or not 3 dots, but the 3 circles. Those are also right here. So basically what we're seeing is we're seeing something like this, and then a massive move towards the upside, and that's what we see right here. So I believe we'll likely see something along those lines. If anybody remembers my one of my past videos, I mentioned something which you're not going to find this anywhere, but looking at something, bear market says forming inverse bull flags. So we'll come down this area being right here where we continue to consolidate downwards, and we have this M right here, or maybe we come down and we make more of a double bottom, and then we have that blast off. But essentially what we're seeing here is basically, and you can also kind of look at it as like somebody standing at the tee, they have their golf club and they're about to hit that ball, and the ball stands for Dogecoin, and Dogecoin's about to go to the moon, you know, hopefully after this massive drop in price we've seen for so long. But for the upside, really starting to see movement above 9 to 10 cents. Look out for that. To the downside, 0.0, around 6.5 pennies would be what to look out for. Starts to significantly push below that, perhaps you want to get out. Again, it's not financial advice, but it's giving my opinion on things. And then once we start to break through around that 10-cent area, going back to the 12 to 14 cents, perhaps could find some consolidation there before we continue to go towards the upside. Here for CRU crust, as I mentioned, again, we'll see our 60-month resistance here. We zoom in, we have that falling wedge pattern I mentioned in the previous video. We came down and we've, so far, maybe this is going to be a kind of a double bottom along this general area right here. What we'll see is we'll continue to move up from here. Maybe we'll see some consolidation. We'll move in this area, then we'll continue to go higher. Again, who really knows exactly how it's going to move? But overall, most of these are looking great. I mean, obviously all of these are showing breaking out of, not all of them, but most of them, of massive 16-month approximately resistances, and the, not just on Bitcoin, but I mean, I guess I'm not really even going to go over that. This is a daily chart, but again, just tying in everything, especially those higher time frame charts for Bitcoin. Everything just really looking solid right now. Here for Algorand being one of those ones that has yet to break out of its 16-month resistance. We're still bumping our heads on it. Right here we bumped it on 28.30 cents. Now we're bumping it on 22 cents approximately. If we zoom in here, to look out for on the downside, I would look out for seeing significant price plummet below around 21 cents, and then if even further, doesn't really have much room to go. I mean, essentially it's 21 to 19 cents. If it starts to go significantly below that, it's not going to be looking too good. For the upside, we just want to see it break the 60-month resistance finally from the 23 at highest. Yeah, so I mean, it's essentially 23. So 24 cents really. If it starts to push, once it starts to push above that, we start to close these daily candles above the 16-month resistance. That would act as really good confirmation. But just to input my bias, I mean, I personally, because of what I'm going over, like I've mentioned multiple times with Bitcoin and how that looks, I mean, I personally would just, I feel like it's strong enough to just go ahead and buy, but again, I'm not giving financial advice, I'm just giving my opinion. The 50 moving average, or the estimated moving average, does lie at 27.30 cents, which just lines up with our previous bump along this 60-month resistance, so that's also going to be important to look out for. Then we continue to move towards the upside. The next target's going to be probably either around this 800 EMA around 50 to 55 cents, or maybe even up as high as around pushing $1. If I go back real quick, just to mention it for these ones I didn't mention it on. CRU, obviously with this range right here from around $2.80 to $4.80. And perhaps it could push towards, I mean, $10, $11, or maybe even up to $29, $30. I mean, like I said, I mean, who really knows what's going to happen? I mean, we could see a massive move like this, or we could see it go sideways for a little bit. I mean, who really knows? I guess it's honestly kind of pointless for me to really even go over this at the end of the day. But here for Dogecoin, after we kind of meet this criteria of the 14 cents, likely I would say probably towards a range of around 20 to 35 cents. But here for MATIC. MATIC's been moving better than most of them, I'd say, or at least the chart just kind of on first glance looks better, and how it's more, it seemed like percentage-wise have progressed already through the previous bear market and the downside it made, but towards the upside, looking out for around $1.20 to $1.26. Once it starts to break above that, we could see a quick move up towards here, towards this previous area, going back here, also lining up with this resistance. So we could sit there for a little bit around $1.50 to around $1.70, and then continue to move up towards perhaps maybe this area right here, lines up with this ascending trend line range, and then also this green horizontal trend line. Towards the downside, really, I would just look out for losing $1. And also, I mean, at the end of the day, perhaps it could be, maybe we'll fake out, we'll come down to the 800 EMA at 92 cents. Here for an update on DigiByte, here on this 2-day chart. You can see we've come down, we've met this resistance, or not my bad, support range we've met going all the way back to 2014, 2015. So, I mean, I think this is looking fantastic. Again, we can see basically that inverse bull flag that I pointed out with how bear markets tend to be. We can see this right here. So what we did, we come down and we made an M as a double bottom. Once we start to break this ellipse right here at around $1, or not $1, but around $0.015, that's really the price target. Look out here for the upside. And then if we start to lose 0.0085 down to around 0.0074, I would look out for that on the downside. But overall, I would say this is, I mean, just to give this one a measurement, which I mean is going to broadly pertain to everything that I've gone over so far. I mean, DigiByte from its all-time high is down 96%, just about. Bitcoin's down maybe like 75. I mean, 75 to at some at most to maybe towards 100% from their previous all-time high. I don't know if there's actually any that much, but I mean, 75, 96%. I mean, market's down massively. It's been over a year. We've formed this right here, this consolidation in this bottommost range. I really personally, again, just to give my input, don't see any reason not to buy right now. And all those people that are obviously still bearish, there's always going to be people who are bearish, even when things like are clearly and blatantly in the charts, especially these higher time frame charts, showing and indicating that overall we are definitely seeing a momentum reversal in the broader market. But that was about all that I wanted to touch on in this video. Hopefully you guys enjoyed. Hopefully you were able to learn or take something away from this video to apply to your own trading scheme. Again, this channel is not meant for financial advice, so don't make a trade. And at this point, I'm giving you just smart advice. Don't make a trade based upon what I say. You need to come to your own conclusion for whatever reasons you think, and then make your own decision that way. But outside of that, all else being said, I hope you all have a blessed day.